Hi, everybody. It's Scott Riley, the Market Update Desk, March 20th, second day of March Madness. Had a couple upsets yesterday. Did you call them correctly? We had one of them. Didn't have a lot of them, but we had one. We're starting the day off today in a sea of red with mortgage-backed securities and 10-year treasury. It is not a pleasant technical picture out there. Let's run through what's going on. What's driving this is word broke this morning of the ECB, European Central Bank, talking about raising, I did say that word, raise their central bank rate at their next meeting in April and possibly again at their next meeting. We haven't talked in a long time about an increase in governmental base rate, but now that is out there, and that sent a lot of negative waves across the board for all the markets. Another thing that came out today was Fed Governor Waller, who had been a very strong dove advocate within the Fed, indicated the reason he did not vote for a rate cut at the last meeting a few days ago was because of the concerns over the Middle East, specifically oil prices and the downflow effect with inflation. He did comment, though, that last month's jobs numbers of a minus 92,000 is extremely concerning. And if we got another of a negative job report, the Fed would need to start to address that more than what their comments indicated from Chairman Powell's speech. Now, on a positive note, we did get the Coality rent index for last month, and it showed rents again decelerated to up 1.3% year over year. To give you a perspective, that's half of what the rent increase report was for same time last year. What it means is we'll get some positive effects on that with inflation, but it's so backwards looking within the CPI and PCE. It's going to take a while for that to all flow through, but we've seen this deceleration of rents now for a while, and we are starting to pick some benefit of that. If that wasn't there, we would be showing higher inflation numbers. To give you an idea what the market's doing today, 10-year treasury is the bulls are winning over the bears, unfortunately. The 10-year treasury is up 12 basis points, and we have now gone above another very important resistance level. We're sitting at 4.377. Mortgage-backed securities, those are down 80 basis points this morning. We broke below a very, very, very important Fibonacci level within mortgage-backed securities. The problem is we have a long way to go, probably another 30, 35 basis points before we reach another resistance level. So we may not be out of the downward stream of numbers now for mortgage rates and mortgage-backed securities and treasuries. It's going to be the dictation of what's going on in the Middle East, both in real data and perceived data, because we've got traders in the market pushing up oil prices. Brent crude up again today. So that is pressuring numbers there. We'll keep on top of everything. The good news for buyers, buying in an up interest rate environment gets you less competition. So while rates may be higher, you very likely could pay less for the house in sales price dollars, because you have less competition. So there's a positive note to that. Give us a call. We are on call again this weekend, 616-293-2189. Hope you have a great afternoon. Scott Riley, the Market Update Desk, your original singular market news source for West Michigan. Take care.